Hello all. Welcome to one more topic, the current hot topic, that is tomorrow's RBI press meet. It's June 2022. We are expecting an RBI press meet. What is RBI? RBI is the Reserve Bank of India. It is having a regulatory authority to run banks and other financial institutes. It also reserves gold against which it prints currency and regulates and stores foreign currency and exchange, that is swap. Swap is another trade that is done by reserve banks and central banks. In India it is called as Reserve Bank. In European country they call it a central bank. In the US they call it as Federal Bank. All are one and the same thing, but depending on the names are changed. To an extent it will regulate FDI investment as well. There should not be too much investment. The danger is when they want to take out everything, the economic system will collapse. So they will maintain and manage, limit the foreign investment, foreign direct investment. Then what is MPC? It is a Monetary Policy Committee which will having 6 members. They advise RBI on various issues such as how to control inflation. Inflation is the increase or decrease in the purchasing or selling rates. For example, if you want to buy a property, if it is at a cheaper rate, you have bought at a higher rate and selling at a cheaper rate, you will be in loss. So seller will be in loss in that condition. If it is too expensive, buyer will not be interested. Inflation should be maintained in such a way that there should be a transaction takes place between these buying and selling. That's how the economy will run. How this economy will run? By buying and selling. Why this MPC and RBI wants it transaction to take place? Because this transaction takes place, then tax is generated. That is what required for the government. Government wants this transaction to take place to generate tax. Then how RBI functions? In order to safeguard people's money in banks, banks need to deposit 4% of deposits to the RBI. Bank, if it has 1 lakh rupees of your deposit, 4,000 will be deposited with RBI. What RBI does with that money? It gives back to bank again at an interest rate. That is what is called as repo rate. A repo rate at which bank is getting money from the RBI as a loan. For example, if RBI is giving at present at 4.4% interest rate, bank will give it to you at 12 to 15% interest rate. But then bank will earn. It is getting a cheaper money and giving it for the higher rate of interest. So when the repo rate is reduced, RBI expects it to bank to reduce the interest rate so that people can take more loan. What happened in recent times when the COVID-19 has hit, people were running shortage of money. So RBI reduced its repo rate. When it is reduced, interest rates also came down. People started taking more and more loan. When the more loan is taken, more money with the people. When the more money with the people can spend like anything. Then the price of the commodities will go higher and higher. In that condition, inflation will increase. So RBI don't want that inflation to increase. When the inflation is increased, money will lose its value. What RBI did? It printed currency against the gold reserve what it has. So it has devalued its currency. That is what is called as liquidity. RBI has printed excess 20 lakh crore rupees money and given to the banks as a interest on the repo rate. Then bank took that money and given on the lower interest to the people. When the money people are having more and more, the price of commodities and other things will go higher and higher, and that time inflation will increase. When the inflation increase, then buyer will not be interested. Then the RBI will increase repo rate, in which interest rate will go on increasing from the bank side. There people will have less money, then the seller who are demanding higher will come down because buyers will come down, then the inflation will come down. This is how this cycle takes place. Why, how, and it will affect stock market? This is the data of May 31st of Nifty 50 index. I'll talk about index in coming days. Index which contains 50 companies. What are those 50 companies? If you look, financial services, that includes banking and non-banking finances, which constitute more than 35% of weightage. So, whenever there is a major issue which is related to the banking sector, this and it affects entire Nifty more than any other things. How this MPC will work? When you go through the gadget, it ensures that analytical data requirement for the MPC meeting and members are met through the effective coordination mechanism involving staff across various departments of bank. Banks are involved in financial transactions in the various way. So they will collect the data from it, then they will understand how the inflation is increasing or coming down. This gives RBI monetary policy will be biannually, that is every 6 months they will check this rate. Okay, they will explain the monetary reports, and bi-monthly they will reassess the same thing. Monetary policy will contain following things: inflation in last 6 months and expected outlook on the inflation in coming next 6 months. That is before next biannual meeting, what is the projection in the next 6 months and how it will affect the growth. The same thing, how it will affect the financial market and its stability at the same time. As per my analysis, 0.35 to 0.5% rate hike is expected by all. If it is so, it has been discounted by market, means it is already been digested. Okay, market will not like uncertainty. When there is uncertainty, market will be nervous. Suppose you are trying to buy a property. If you have an uncertainty of that property, you will not buy. The price of that product will come down. Same thing applies to the market as well. So when it is discounted, means you are accepted the drawbacks associated with that property of it is a lower price or the higher price. So that means it is discounted. So market recent running down is discounting this factor. If anything above this, above 0.6 or 0.7, which is highly not possible, if happens, it is highly negative. RBI wants to control the inflation. At the same time, it also wants to take back the liquidity to increase the rupee value in the international market. But it affects having the analysis of monsoon effect. As of now, monsoon is not yet arrived, a little deficit. If monsoon more than 110% is considered optimum, below that is considered as deficit. If below 90% is a drought or it's a very less monsoon. Crude, in coming days we are largely dependent on crude import. Geopolitical issues which are affecting entire world. Based on this, it needs to do the rate hike. So this is my analysis. Just wait and watch. By 2 o'clock, if repo rate is 0.35 to 0.5%, it's positive. If anything above, it's negative. Good day. Thank you.